Check out GE shares falling about 5% today on a downgrade to underweight from JPMorgan Stephen Tusa. It's our call of the day. Tusa hammering the stock, writing, "We believe many investors are underestimating the severity of the challenges and underlying risks at GE while overestimating the value of small positives." He cut his price target to $5. That implies a 50% pullback after the stock rallied nearly 40% to start the year. That $5 price target, by the way, by far the lowest on the street. And Tusa's previous price target of $6 was already well below the average analyst target of a little more than $11 a share. So is Tusa on the mark with this downgrade? Could there still be upside, though, in GE?
So I think that Tusa hit the ball out of the park with his call originally. The stock was down close to between 75 and 80%. And now, since it's bottomed and bounced, it actually bounced 75% off the bottom. I think he's trying to thread the needle here. I don't know what the risk reward is. He looks like a genius on that original call. I don't know if the risk reward there is there for him now to start banging the drum even more about $5 versus $6. To me, I don't see it. I'm still holding the stock. Everyone knows it's about power. Everyone knows that it's about a real tremendous turnaround story. So risk reward, I'm still okay being long it. I choose to believe in RBC, which has a $13 price target on it, which is above where I own the stock.
You know, what's interesting is that when a stock gets beaten down a lot, it is small positives that move the stock a lot to the upside. I mean, well, and that's what he's saying. It's not, shouldn't be that way.
Right. Well, also, it's a very indebted company, right? So you have this issue of enterprise value moving a lot when relatively small, the equity can move a lot, rather, when the enterprise value doesn't really move that much. I mean, to me, I have leaps in GE, so I know exactly what I could lose. I would bet now it's probably going to be 100% of the premium that I put in, because they're leaps of 20. This is taking longer than I had anticipated, and I think that, they're trying to do the right thing, but it is possible. It's just not fixable with this capital structure. It needs to be further diluted. That is possible. Right. So
well, the small victories are that Mr. Culp's actually moving faster than people thought he could. So if you look at biopharma, if you look at Wabtec, these have been divestitures that actually make some sense here. Look, JPMorgan's talking about 35 times earnings. I don't think anyone's looking at this on an earnings multiple. This is an asset play. This is a liquidity play. And I think at these levels, I'm more encouraged than I'm discouraged. I'll put it that way.